Available inventory of homes for sale dropped big this week. So far this year, demand for homes has exceeded the number of sellers that are willing to sell. It seems that sufficient numbers of home buyers are able to afford homes at these prices and these mortgage rates. So buyers know that if they buy now and rates decline in the future, they can always refinance. If rates go up in the future, then a buyer now knows that they have already their best position. So perhaps that's the psychology driving the market right now. The country is at record levels of employment, and enough of those people can afford homes that they're buying. At the same time, very few people are selling, and so available inventory falls. Every week, of course, Altos Research tracks every home for sale in the country. We analyze all the pricing, all the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos market reports with your buyers and sellers, your clients, now might be a good time to step up. Go to altosresearch.com and book a free consult with our team because everyone is worried about what's happening in the market right now. They need you to help them see clearly. There's a link in the description below to connect with us. The data we cover here in these national videos, this is national in scope, but we cover it for every zip code in the US. So join us to dive in. I'm Mike Simonsen. I'm the founder of Altos Research, and here's what we know for the first full week of February 2023. Inventory of homes for sale continues to fall. It might surprise you to learn that falling inventory in February is actually a pretty unusual phenomenon. Until the pandemic, you could actually count on inventory to be rising now as the spring's home sellers start listing for the biggest demand part of the year, but buyers aren't out in force yet typically. But since the pandemic years, buyers came out more quickly after the start of the new year, and inventory didn't bottom until much later in the year, much later in the spring. So after last fall, though, our models had assumed that inventory would bottom this year in January, like the pre-pandemic years. You'd expect it to be climbing 1% to 2% per week by now. Instead, inventory fell by 3% this week. It's a big step down, meaning we had far more buyers than sellers this week. There are now only 443,000 single-family homes on the market across the whole country. At the right end of this chart, you can see how steep the decline is over the last couple of weeks. I've highlighted 2019 here too, when we had 814,000 homes on the market, and inventory had rounded the corner and begun to climb for the year. Which is how it used to behave. So we have 46% fewer homes on the market now than we did in 2019 at this time. We started the year with expectations of returning to those maybe previous normal levels of inventory, and yet the data continues to defy the expectations. This week, Thursday, by the way, we'll have our hour-long webinar where we get to dive into all the inventory numbers, the latest forecast for the rest of 2023 and a lot of the local markets. The data is very different from what we expected even as the year started. And the market is likely very different from what your buyers and sellers think is happening. So if you need to understand and communicate about this market right now, so I recommend you join us this Thursday at 10 a.m. Pacific for the Altos Research webinar. There's a link in the description below. Click that to reserve your spot. These are limited to 1,000 people, and we have way more than that each month that want to join us. So you can still reserve your spot. Click the link below, register, and then join right at 10 a.m. Pacific on Thursday. We'll see you there. It would be a mistake to think of this housing market, this spring market, as only demand driven. There is demand, but this is really a supply story. Much of the US is still at pandemic lows in terms of homes on the market. Each week, Very few new listings are becoming available. So this week, 58,000 single family homes were listed for sale. That's 13% fewer than last year at this time. So again, if you were expecting inventory to climb because of a scary economy or because of investors panicking, for example, if you expected a continuation from last fall, you're being very surprised every week now. Americans are holding onto their 3% mortgages. They are not eager to sell their homes. In this chart, each bar here is a week with the total count of new listings that week. The light portion of the bar are those that went into contract immediately after listing, essentially immediately. Last year, as mortgage rates were starting to tick higher, they were still in the threes. And we had the pandemic bidding wars, we had like demand off the charts. You can see the light portion of the bar last year was much bigger, those immediate sales. We had 13,000 immediate sales this week compared to 22,000 last year at this time. So you can see both sides of the coin in this chart here. The total new supply is smaller. The total bar is shorter each week. But that urgent demand is smaller too. So demand is still sufficient to keep inventory shrinking each week, but it's not nearly as high as it was last year at this time. We can see the demand story playing out in the price reductions data too. This week, price reductions fell to 32.2% of the market. So 32% of the homes on the market have taken a price cut recently. This is a totally normal percentage. You can see in this chart where every line is a year, this year's dark red line is dropping rapidly. And if it continues on this pace, we could be under 30% in a few weeks. That would illustrate a remarkable turnaround from last fall. See how quickly the light red line climbed last year? Again, demand is not crazy like it was at the beginning of last year when only 18% of the market needed a price cut. Now it's 32%, but it is tightening rapidly. When we measure the pendings, we can see a steady climb in home sales are coming. Last year, we finished with very few transactions, but each week the new pendings rate is climbing rapidly. There are now 291,000 single-family homes in contract pending across the U.S. That's 23% fewer than last year at this time. But recall, just a few weeks ago, we had 30% fewer than the previous year. So that sales gap is actually closing pretty quickly. Last year, this time was one of the hottest markets ever, so it's hard to compare with that. In fact, last year at this time, we had more homes in contract, in that contract pending stage, than we had available on the market to buy. That's no longer true, though. But there are 13,000 new pendings this week, which is only 9% fewer than last year at this time. So it was 30% fewer pendings. It's now 23% fewer pendings, and new pendings is only 9% fewer. So it looks like that sales gap is continuing to narrow. Still fewer sales than last year, but much better than the catastrophic fall market that we experienced. All this comes together in the price trends. Home prices are slowly ticking up from the holiday lows, as you'd expect for this time of year. The median single-family home price in the U.S. right now is $418,200. That's up a fraction from last week. The important thing to note in the pricing data is that none of the leading indicators are particularly strong. In fact, the price of the new listing, so all the homes that newly listed this week, is exactly the same as it was a year ago, flat, like a 0% increase in the price of the new listings. Last year, demand was off the charts, and you can see in the light red line here, was jumping each week with that demand. Now the light colored line is moving sideways. The price of the newly listed cohort leads the full active market, the dark red line, which leads the pendings, which finally leads the sales results. So as we see supply contracting across the U.S. and we see sufficient demand, despite higher mortgage rates, we can see the impact of affordability of those rates that is on a market that is not driving prices higher, really. At least not yet. This week, mortgage rates jumped. So we'll see what happens in the next week or two, how sensitive Americans are to those changes in costs. As I mentioned, this Thursday, February 16th, we have our Altos Research webinar. We'll review all the details. We much more than we can in these short videos each week. We'll do all the leading indicators, all the latest forecasts for the year, and lots of local reviews. If you need to communicate to buyers and sellers, many of whom may have very wrong impressions about the market right now, if you need to reach people, you should join us. Click the link below to reserve your spot. If you need the data right now, you want to dive into your local market right now, go to altosresearch.com, book a free consult with our team. We will help you interpret the crazy market for your clients right now. This is a critical time to be properly informed about the housing market. So join us. All right, more next week.